Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market. Today we will take a look at Great British Pound, because here I see a really cool setup is forming. Besides on euro currency, if you take a look what's going on the intraday charts, actually nothing. So we see this minor upward pullback, so everything that we said concerning euro stands the same, and just we need to see what will happen. Next day we will get inflation report. In general, it should not bring any big reaction, as in general inflation is slowed down currently, so nobody expects from big changes. Besides the Fed policy in general, the direction of the policy is determined, and from that standpoint of view, whatever data we will get, they could bring some short-term volatility, but hardly it will make the significant impact on the markets. At the same time, Great British Pound stands under impact of the actually two big events. So first, you probably heard the story about rate cut. That was given some hint a week ago, last week, that rate, so Bank of England could start cutting rate together with the major central banks, but later they will try to shut down this topic, so you consider reaction and start speaking that probably it's a bit earlier, we will see, and so on. But based on these comments, the first reaction has happened. Those of you who are watching regularly our videos, you probably remember this butterfly that we already talked about previously, and currently market has reached its targets in 34.40 approximately. Here we have the normal reaction on 127 target, and the attractiveness of this setup is mostly dual direction. So you could use this setup as for a trading to the downside later a bit, as for a trading to the upside. You just need to choose the different points for entry, and you use slightly different approach for management of this position. Because after this speech about the rate cut in England, after all, the Great British Pound stands on the impact on the same factors. So if we take a look at the dollar index that we already have mentioned, which is also the headwind for the Great British Pound, take a look at the 10-year bonds. Let's take a look. Has even jumped even higher than it was on the weekend. Now it's running around 4%. This reflects long-term inflationary expectations in the United States. So this, of course, makes some pressure on the Great British Pound as well. And currently at this point, it's very difficult to say what we will get right there, whether it will be deeper downside continuation or even reversal based on the butterfly. We also can't exclude this situation, or it will be upward continuation to the next target. So first market will have to challenge the 35.30 resistance, but you consider the next target of the butterfly will be around 38.25. And here's what's actually I found interesting here on the Great British Pound. First of all, if you take a look at the futures chart of the cable, you will see that market is flirting with the MACD line, and potentially it could bring the grabber by the end of this week. The grabber is visible not only on the December contract on Great British Pound, but also in the continuous contract. So in general, we do not have any reasons to have some doubts about this. The only thing that is needed is that actually market moves slightly higher and form this grabber. This is the first pattern that we need to keep an eye on. Even without this grabber, we have a lot of interesting stuff on lower time frames. So by taking a look at the daily chart, we could get pretty nice looking hand and shoulders pattern. And the special situation with the hand shoulders stands about strong support area right around 130, which agrees with the neckline. And now you could imagine what will happen if, for instance, market will drop here slightly within the week, maybe inflation data will be reported or something, to the confluence and shows upside return by giving us the weekly grabber right around the confluence support, and take a look as accompanied with the daily oversold. Even without the grabber, that might be a great chance to buy, take the long position. Because if even hand shoulders will form later, we will get pretty nice bounce right to the top of the right arm, which is around 132.70, and will be next point to look for. But here, if you remember, we have traded this kind of the setup not too long ago, on the intraday charts. This was also the hand shoulders accompanied with a strong support, and we said that it's relatively safe to consider taking long position in such circumstances. Well, that's the first training setup. Then, when the market will appear at right shoulder top, you could make the decision whether to grab the profit, reverse the position, or make a bet on the failure of this hand shoulders, especially if the grabber will be formed. Because not everybody knows about the grabber and about confluence supports. Most traders see the hand and shoulders pattern, but there are lots of nuances currently stands around it, which makes it work absolutely different in opposite direction. So with having the grabber right at the confluence, for example, we do know in advance that the hand shoulders will fail, or at least we will be ready to bet on it earlier than any other traders. So this gives us some advantage. That's what I really think it's really interesting here on the Great British Pound. Finally, if we take a look at the 4-hour time frame chart, we have the ABCD with the XOP around 130. That's also creating an agreement with the support area. It's really great. The major, well, a bit thrilling moment here is where to take the position. If we wouldn't have the oversold here, I would say, guys, let's wait for an XOP. Market will reach it and then we consider position taken. I'm sure that here we will get some bullish reversal patterns around. But here we have a bit tricky moments that market is a daily oversold. So it has some problem with the straightforward downside acceleration to the target. And the one thing that actually might be disturbing a bit, that reversal could happen a bit unnaturally. So other words, it might happen earlier when the market will not be able to achieve XOP on the 4-hour time frame chart, just because of the barrier of the oversold. So this is the moment that you need to control. It might be done in a few ways. So first of all, you could just, for example, if you were ready to bet on all this picture, you could maybe consider taking small part of your position somewhere here with the stops below the confluence and then see what will happen. If market will drop, you add your bulk of the position in the proper place, which give you an average very good entry. You could wait for, as I said, absolute levels that we have just discussed, considering of the position taken. Maybe you will get something other ways, but this is a bit moment that brings some nuances on the entry process. It's oversold. It's not very comfortable to deal with it when you plan to take the position alongside. So, but in general, as you could see, overall setup looks really great. And definitely it's worth of our attention. Finally, you could see that here we have minor divergence that suggest taking out of these lows, which in general agrees with the overall strategy. So from that standpoint, you maybe makes sense to wait when this will happen, and then start watching for some reversal patterns around the confluence. This is the best approach, but in the current circumstances, it has some probability that it will not be formed because of the oversold conditions. So let's keep watching and see what will happen.